An apple a day keeps a doctor away. Or is it time for Apple to fly to the moon? Yes, on today's episode here at Barry Charles, we're going to do a deep dive, well not deep dive, but into the financials of Apple. We're going to look at the stock analysis. We're going to look at revenue, net profit, earnings per share, market cap, free cash flow, return on invested capital, dividends, the whole shebang. Boom. We're going to look at a little bit of the Vision Pro. Is there going to be the future for Apple? Is Apple Car eventually going to come in at any time in the near future? Where is the growth for this company? Because it's been a little bit stagnant, even though the stock price has gone up recently. We're going to talk about it all right here at Barry Charles right now. Remember to like and subscribe to the channel and share this video with your friends. But let's get to it at Apple stock analysis. And if you wait right to the end, folks, yes, I will give you the intrinsic value of Apple that you can look at potentially looking at a price to buy. And let's do it right here, right now. Not financial advice, just a dude on YouTube trying to make the world a better place and hopefully make you financially free. Let's go right here, Apple stock analysis, right here, right now. Welcome guys and gals back to the channel. Yes, we're going to look at Apple, the great company, the greatest company of them all, some people would say. Absolute, one of the biggest, the greatest inventions of all time. The iPhone, absolutely boom. Smartphone, absolute brilliant thing. Steve Jobs. But the question mark you are all answering is Apple's days of growth over. Are they struggling? Are they going to find ways to improve? Well, the Vision Pro is a start in that direction, actually inventing something new. It wasn't brand new. They've just copied someone else and taken it to the next extreme level. Just like the iPhone being more expensive than the Samsung. Same with this against the Meta VR set. So we are here, right now to try and help you understand the Apple's financials and look at where the improvements are going forward. Yes, well, Apple, at the moment, let's have a look at it. This is where the danger signs for me are. Revenue, $394 billion in 2022, dropped $383 million in 2023. It's dropping. Doesn't make sense to me when prices go up, but same with the net profit, $99 billion down to $96 billion. So yeah, some concerns there. Earnings per share, 6.59. It's okay, but it's not great. P ratio is sort of gone boom now, 29.61. That's a bit in the middle range. Is it a growth company? Is it a company that's dying off? Well, we need to see more growth if you want the stock to continue. 52-week range, 138 to 199. So now the big movement in the stock this year, last 52 weeks. Are we going to see more improvement in 2024? We're seeing it at the moment. Will it continue? Time will tell. Now the dividend is very pitiful at the moment. Absolutely pitiful. 0.49% yield with a price of $96 per share. Not 96, 96 cents per share. Absolutely outrageous. Not even point talking about a dividend. If you're in the stock for a dividend, well, you're sorely mistaken. Maybe in 50 years' time will be worth it. Stock, the short interest is 0.7%, not even 1%. Yeah, not even 1%. Absolute. So low, it's not even worth mentioning. So nobody's scared of Apple crashing to the bottom of the earth. Market cap, and that's why a market cap of over $3 trillion, folks. $3 trillion is still fighting with other companies for the strongest cap. Other caps starting to really rise up, but they're still up with the best. Total assets stayed pretty flat over the last year, so 352 billion, hasn't really changed at all. Total liabilities gone down a little bit to 90 billion. That's nice. That's not a bad gap, but I'd like to see they drop down even more if they continue to get their liabilities in check, and that's positive. Now this is what I like. Well, I don't like parts of it, but I do like a bit of it. The free cash flow dropped from 111 billion to 99 billion, but their long-term debt is 98 billion, down 3 billion from 2022 to 95 billion now. So they can pay off all their long-term debt right here, right now, if they wanted to. That's what I like. That's why I'm invested in this company. That's why, full disclosure, Apple is my biggest investment. No doubt about it. Has it been my best investment? No, absolutely not. But it's been very, very solid, and I'm expecting there will be big turns later in the future as it continues to go. It's not going to have what it used to have, no doubt about it. I understand that completely. But you're going to see improvement as the share buybacks continue as we go forward. Shares outstanding, $15.4 billion. Return on invested capital at 31%. So they do know what they're doing there. For a big company, they really do give you some return on invested capital. So that's very promising. But what is Apple doing? What is Apple doing to grow this company from the doom? Is smartphones dying out? Well, is the Vision Pro the answer? That's the $1 million question. Will smartphones be obsolete? Obviously, at the moment, there's question marks on the Vision Pro. Okay, obviously the first question mark, 3,500. It's got an ugly battery cord that is attached to the side, and you have to plug it in and all this sort of mumbo jumbo. I won't be doing it. You have to plug it in if you want to charge. And the battery life's only two hours, so you can barely watch a movie on it. From what I've heard so far, it's quite heavy to have on your head. So expecting to have it on for 2 hours to watch a video or a movie or something, is that really practical for being too heavy? Even though obviously it's the most high quality set out there at the moment in terms of the VR. But I'm looking at positives. Okay. Now this is the closest we're getting to having a chip right here, folks. It's coming. I don't know if it'll happen in my lifetime, but a chip in your head, everything comes through your eyes, boom, everything comes through there, you get all the information. I don't know how it's going to work with the human tissue. Obviously there's something they've got to work out, but just a little chip in your head, you get everything in front of your eyes. Question mark is if you can keep that off. That's probably the question mark. Can you take it out when you don't need to use it? These are all the little things, intrinsic things. That people are saying it's not happening. I'm telling you what, there'll be people getting tested on this stuff. They're getting paid millions of dollars to take this risk. But yes, computer chip. This is the closest we got to it as the VR sets at the moment. We basically just use your hand and go like that, boom. Instead of using the phone or all that. Smartphone could be obsolete 5-10 years time. People are saying, you're kidding me? I'm telling you now, there's a possibility that it's going to go. Apple need to be on the march to find something else that's going to give them profitability. They had the Beats by Drake for a while, but that sort of died off now. They need to find new ways of investing. The one that they've been doing for a long time, since about 2013, 14, I believe, is looking at an Apple car. But nothing in the Titan, I think it's the Titan was called, the project. Nothing has come through as yet, but there is talk 2028. There's potential there could be a car ready in 2028. No prototypes of this car have ever eventuated. They've gone with different companies so far, just haven't come up with a price point they think is good enough to really go forward with it. So whether this eventuates, I hope it does, because it's got to be some way of making some more profit for this company. And cars, if you got an Apple car, you got an Apple smartphone if it's there, or the Vision Pro, just keep buying the Apple products. Makes sense to me, and makes sense for potential for long term. But if it fails miserably and the smartphone dies off and Meta take off, Apple is in danger of going to zero. I know people say, you're kidding me? I don't think it will go to zero. I think they will find a way to move forward. They've got the money to figure out where the market trends are, so they will stay afloat. I believe they will, but there is potential. And even this biggest company, that it could all fall plateau if they don't keep themselves moving forward. That's what Apple need to do. They've got to continue to move forward, and that's the bottom line. And that's why I haven't invested a lot in Apple of late, because I think they've just been overvalued, and you haven't really got a price target to get lower, unfortunately, for all the people wanting that lower range. So let's have a look at Apple. We're going to look at the intrinsic value right now. I use Trade Brains Grams calculator. It just gives you a simple calculation with the current share price, with the EPS growth rate and the bond yield to give the current bond yield to give you an intrinsic value. So this is to give you a bit of a prime example of why I have already gone load the boat on Apple. So the earnings per share at the moment, so the current share price is around $195 with the EPS of 6.59. We take into account the growth rate of 5%. If you think it's not going to grow that well, $127 is intrinsic value, so absolutely overvalued. If you go to the same metrics with the current share price 195 at 6.59 earnings per share, but you just double that growth rate to 10%, then you're looking at fair market value 195. So that's why I'm saying Apple is always, this seems to be a stock that is always around fair value. You don't really get much under fair value because it seems to be one of the main top investors invest into, have their money as safe boat in this company. This is a safe boat company that they believe. They can change eventually. Then if you can say the earnings per share is going to jump to 10, stay at 10% growth rate, then the stock's looking pretty at 297 intrinsic value. And if you think they're going to shoot the lights out and double the earnings per share to 13, with a growth rate of 15%, then the stock is $521 every day of the week. And is there potential for Apple to go there? Absolutely. Is there potential they'll never get there? Absolutely as well. Yes, the intrinsic value of Apple, well, this is a tough one, but yes, I'm thinking on potential future value. So, yeah, depending on how you want to look at this intrinsic value, I still think Apple will be easily $250 stock. I think that's happening. So, but to me, I like to buy at 50%. So you want the stock to be at $125, and it hasn't been there the last 52 weeks. Yes. So Apple, for me at the moment, the current price is a bit of a hold. I'm not saying you're not going to make money, but you're wanting it to go to, from here, you want it to go to 400 roughly to double your money, 390. Is that going to happen in a short space of time? Potentially not. A lot more share buybacks. But they have the potential to get there if the Vision Pro goes absolutely ballistic and they make so much money off it. Is craziness. And an Apple car, but Apple car, even this 2028 prediction, I say you push it out another 5 years, you're looking 10 years before an Apple car even gets to market. So there's a long-term project still with Apple, I think. Don't know what's happening there, if that's ever going to happen, but it's just something you need to look at when you're investing into stocks. Not financial advice. You do your own research before you invest into any stock, crypto, real estate, anything. Do your own research. Invest at your own risk. But that is the Apple stock analysis. My potential intrinsic value of the company right now, where I think it's at, where they can continue to grow. I hope you've enjoyed this video. Remember to like and subscribe to the channel. Share it with all your friends. And I'll be back 3 days a week talking about stock analysis and intrinsic values of your favorite company. Have a great day out there.